Hello, hello. Happy Sunday, everyone. Should be good on the audio. Just pull it over. Alrighty, guys. Hope you had a awesome weekend. I know we weren't on the YouTube the past couple weeks, so excited to be back on here with you guys. Give you guys the insights that from a lot of the feedback I've been getting is very helpful for you guys. So glad here on the YouTube with you guys. Like I said, we're gonna go ahead and look to get right down to the business here today. Got a few things to do this evening. So it's my intention to get on here, give you guys the most important points, what we're looking at, what opportunities we have this week, and then go ahead and get on with our weekend. So like I said, hope you guys are doing well. Happy Sunday. Hello, hello, May. Momentum Trader. What's going on, brother? Hope you're having an awesome weekend. Zen, hey, being patient till CPI makes this week great. Absolutely. Patience is key. Patience is key. Knowing when to strike, knowing when to sit back, and knowing, again, how to play defense and not just have a really strong offense. Again, good trading is not only knowing how to make, but obviously how to protect and keep what you've worked hard to make. Right? So, love to see that. Love to see that. Lucid Dream, hello, hello. Michael, hello, hello. Tommy, my man, hope you're doing good, brother. Sal, Dylan, my guy, hope you're good. Yes, sir. I'm doing good, brother. Hope you're well also. Frank, my man, hope you're doing good, brother. Happy Sunday. All right, guys, let's get right down to the business here today. Like I said, a bit strapped for time here. Got quite a few things to do here this evening. So let's go ahead and get right down to the business here for this week's weekly forecast. So we're looking at the weekly forecast for October 6th, 2024. So looking at the economic calendar at first glance, we're coming off non-farm payroll week, and now we're going into the week with CPI. So with that, the biggest moves, the cleanest price runs are going to occur after Thursday into Friday, because that's when we see the economic calendar is stacked to the latter portion of the week. There will still be trade setups Monday, Tuesday, Wednesday. Just understand the biggest, cleanest runs with a lot of magnitude are more likely to happen Thursday and Friday. I do say that with tongue in cheek though, and the reason being is because of anyone that's been, I guess, paying attention to anything, you guys know what's going on around the world. So there's a lot of things being thrown at this market. So it can move at times you may not expect it to. So just because I'm saying standard protocol is smaller ranges Monday, Tuesday, Wednesday, larger ranges Thursday, Friday from my experience. However, again, in the climate that we're in, anything goes. Bombs start getting dropped, threats start being made, the markets are going to start going crazy. All right, so just some things to keep in mind on the geopolitical side, but we'll touch on that when we get into the charts here in a moment. And again, the economic calendar, how to trade, what days we're trading, when to focus, will all be covered in great detail in our weekly newsletter, which again, we make available to you guys every Sunday, usually at 8 p.m. sharp. So moving right along, the assets we're going to be looking at today, dollar, treasuries, and Nasdaq or index futures. And then from there, if you guys have any questions, I'll look to take a few, but my intention is to keep this one short and sweet here today. All right, so for intermarket analysis, as you guys know, I don't just look at one market. I'm of the opinion that if you want precision, if you want to know the why behind sustained market movements, price runs that are happening on a macro scale, in my opinion, to do that with any degree of consistency and confidence, you need intermarket analysis. So again, that's why I go into the dollar. Again, I don't trade the dollar, but it does help me with all the assets that I do trade from understanding, again, the risk on, risk off aspect, right? So the dollar is going to be important, and again, we'll qualify the dollar with treasury bonds, and then that'll be a smooth transition over to index futures. So let's get down to the business here today. Weekly chart for dollar. So we have technicals shifting bullish after the fundamentals confirmed a change in sentiment. What fundamentals am I talking about? Well, if you've been reading our weekly newsletter, my man Tommy, who's our head macro analyst who specializes in macro analysis, has been discussing that we've been seeing a shift in commitment of traders, confirming that the commercial hedging program is now net long, as well as seasonal tendencies for the fall months are bullish for US dollar. So with all that into consideration, technicals are still going to be king. So the technicals are going to be weighted more heavily than the fundamentals. But what the fundamentals allow us to do is anticipate these types of reversals here. And if you go back through and read those weekly outlooks, you'll understand that Tommy was sharing, yes, I've been calling discount targets, right, for the past few months, which has been money. But what told us discount targets could constitute a reversal? That's understanding commitment of traders and seasonal tendencies. And then when you know how to confirm that with technical analysis, it all marries together to give you pinpoint precision, things we do in our community master classes every week. So for those of you guys that are working with me, you guys already know what the deal is. So what I'm looking at here is as long as we remain above the weekly IFVG, which is this right here, I will hold a bullish outlook expecting premium targets to be repriced to. So this fair value gap here, when we were bearish, we used it as what? Resistance, right? I told you we'd get up into here, sell off, and it did, making a lower low. These PD arrays, these levels, change their role based off the state of delivery. So if the market's reaching higher, this fair value gap's not going to be a means of selling off like we anticipated it over here. It's going to get above it. I want to see it use it as support and expand higher. The wick, 50% here, extending that through. If we're going to be bullish, I want to see us trade to it and through it, and then try to make a run for this weekly fair value gap here above market price. So again, we see a run on stops here, displacement higher, shifting market structure on the weekly. Now I want to see that confirmed in the institutional order flow at these key levels and continue to support price higher. I do not want to see wick constant encroachment hit that and start to break down. I want to see it trade through it, close above it, and again, start to make a run for the weekly fair value gap above market price. All right, so daily chart, we had a 3 drives and a deep discount, allowing smart money to distribute their short positions, right? Because we've been short throughout this entire run here, or not short, but expecting lower prices rather. So after the run lower has completed, who's making money here? Well, we have the smart money's been, so if you're short and you need to close out profits, you need to buy back. So what we're seeing here is the 3 drives provides that liquidity. All the narrative that goes into 3 drives pattern, not going to explain all that here. All you need to understand is that when the market rallies, people are buying it with the sell stop here. As it rallies once more, people are buying it with the sell stop down here. As it rallies here again, people are buying that and putting sell stops down here. There's a lot of people that trade that always try to catch the bottom. Not a very successful strategy unless you understand all these other factors and how they come together. So what those sell stops are doing is they're engineering sell stops and a deep discount. Who's that advantageous to? Smart money who wants to buy a discount. Because if they're putting their sell stop here, here, and here, who's going to buy those sell stops in a discount? Smart money, right? So that's the narrative behind a 3 drives pattern. I don't look for 3 drives patterns in and of themselves. Every single day when I'm live with my group trading, we see 3 drives patterns every day. I don't trade on all of them. There's very few specific ones that I do trade on, and there has to be logic behind why I would trust that. And that's what I'm sharing here with you guys. Yeah, so the 3 drives in a deep discount, again, allows smart money to distribute their short positions and accumulate long positions ahead of the repricing higher that we're seeing. So what I prefer to see is the daily inversion fair value gap here, support price, and then I want to see speed through the up close candles on the sell side of the curve to confirm continued bullishness. That's a mouthful, but all I'm saying is this daily fair value gap, I want to see us stay above it, how we closed here, use it as support, and then I want to see speed through the up close candles on the sell side of the curve here. Right, so with this would be a bearish order block, but I'm not bearish. So I want to see it trade to it, through it, make a run for the liquidity here at the 103.227 level, then make a run for the liquidity here at the, we'll call that 103.6 even, and then above that we have that daily fair value gap. Again, that only remains true as long as you remain supported inside these key levels here. I like this as a shift in market structure after a run on stops. So now I want to see the market trade higher, and I prefer to see these fair value gaps down here left open and treated as a breakaway gap. Because then what that'll confirm to me is the price run that we're likely going to see to the upside, just like we did on index futures, for example. Let me looking at Nasdaq. If you remember when we were down here, I told you guys I want to see that be a breakaway gap, and look at the influence that has on price action. Right? So same thing, just like I called it live to you guys before. I want to see that same thing here. Let's say we trade down into those fair value gaps. It doesn't make me necessarily bearish. It's just not as bullish as I'd want to see it be, just like we worked in Nasdaq the past few weeks. Moving right along, looking at the 4-hour chart. Now that we have the narrative behind us on the weekly daily, I just simply refine that into my lower time frames. So here we have a weekly, the 4-hour fair value gap, which overlaps with the daily and weekly levels that we are looking at. want to see that level support price expand higher into the equal highs here to complete a market maker buy model. So that's what I'm looking at. If we trade all the way down through this fair value gap, last line in the sand would be the bullish breaker here. So it can trade down through it. Wouldn't be ideal. Last line in the sand for me to be bullish is the bullish breaker. So weakness in treasuries, what we're looking at here is the treasury bonds themselves. So if you know anything about the money that we have now, the currency that we use now, it's all fiat, right? It's monopoly money. So what backs the monopoly money? Debt. So that's why treasuries, which is the debt market, gives us insight into what the valuation of the currencies are likely to be. So what else telegraphed lower prices, or excuse me, what else telegraphed higher prices on dollar, lower prices in yields? We'll go into that on the daily time frame. Weakness in treasuries translating into strength for US dollar. So there were several things that were tipping its hand to a reversal in dollar, two of which were the two fundamental factors I covered at the beginning of the stream. And then the third is this last fundamental factor of the treasury market or the debt market and how it's going to be directly correlated to the price action that we see in US dollar. So again, weakness in treasuries translating to strength for US dollar. Strong drop lower into the weekly fair value gap that I want to see us get below and use as resistance to continue the sell program. So this fair value gap here, I want to see us continue melting through that, use it as resistance, and then eventually make a run for these equal lows longer term. Longer term, I think dollar is going to keep ripping higher, and we're going to see dollar trade at very high premium levels, especially with everything that's going on around the world. You're going to see gold repriced higher. You're going to see dollar repriced higher, and that's going to be on the back of everything that's going on around the world and investors wanting to seek safety or safe haven for their assets, for their investments. So looking at the daily chart, again, the reversal in dollar was telegraphed with the weakness in treasuries. That should say treasuries. I put yields there by mistake. These aren't the yields, these are the treasuries. The yields are going to be the inverse of this. So that should say treasuries. Telegraphed at the weakness in treasuries, and then the SMT holding at the highs and flushing through all the discount arrays. What does that mean? So at the highs here, you see we had a divergence at the highs here, here, and here. Now, I can't recall. Can someone help me out here? Did I share that live here on YouTube, or was that in the private community that we were looking at that? Because I do recall I shared it on one of the weekly outlooks. I just don't recall if it was for the public YouTube or if that was in the private community. Don't want to be a liar and say I was looking at that here on YouTube when I just said it in my private community. I go live pretty often, so a lot of times I don't know where I said what. But nonetheless, it's not important. We've been monitoring the SMT at the highs. And my stance has been as long as those SMTs hold, and then we start to flush through these discount levels, we're going to see weakness in treasuries and strength in dollar. So the SMTs at the highs did hold here. So again, we made that another run on buy side here, on here, and then we pulled back down into the range. When I'm bullish, one of the things I like to see is displacement through highs. Right? Like for example, look at this swing high here. You see how we displace through it, and that confirms we're going to continue? What's the opposite when I see a swing high and then we trade above it and immediately dive back down into the range? That's more turtle soup reversal style delivery. So when I see that, that does not indicate continuation for me. And then when I see an SMT at the highs, factor in seasonal tendencies, factor in commitment of traders, and you've got easy money at your feet. From here, trading down through the daily fair value gap down close candle, seeing weakness down through all these key levels. So that tells me we're going to see continued weakness on treasuries. And again, that's likely going to continue going into the near future, especially as we see escalation in what's going on around the world. And again, one of the things that hopefully you're able to take away from this is that these movements aren't random. The reversal in dollar, not random at all. And if you understand these tools that I'm giving you here, you can anticipate. You can be ahead of the curve, not just looking at it after the fact saying, wow, I wish I would have seen that. Right? And this is how you get the skill set to be able to acquire the ability to anticipate what the markets are likely to do. All right, moving right along into the Nasdaq 100. Bullish institutional order flow on the weekly chart, finding support at the bullish order block and FVG. So here we have the weekly fair value gap and last down close candle. We traded down into that this past week. Is that making the low of the month for October to keep expanding higher? That's the bias I'm staying with right now. Right now, indices are bullish. I know I'm going to get the question, well, you're calling higher dollar and higher indices? That's really good. You're taking notes. I'm glad to see that you understand the risk on, risk off relationship. But there's another caveat to it. It's not always one-to-one. There's times where we'll have a decoupled delivery in the markets where dollar trades higher and Nasdaq trades higher as well. In the climate we're in, it's an election year. There's all types of things going on around the world, and we're trading in the most manipulated business that there is. So fundamentally, stocks have no business trading at these levels at all. But if we understand the markets are fake and artificial, which they are, then that gives us an advantage, because now we're not looking at it like, oh man, the market has to go lower because the fundamentals are bad for stocks. And I see a lot of folks getting crushed with that logic, because if you look at the markets through logic, the PE ratios these companies are trading at right now is ridiculous. There's no business having these stocks valued at these levels. However, because we have a fake market, because the people that control the market want to give the illusion that the economy is really good in the United States, they rig the markets, they rig the numbers, and they make everything look good. So say all that to say, I'm not here to debate that. I make money on the markets with this logic, and no one's going to tell me that the number in my bank account isn't growing. So I'm not here to debate any of that. What I am here to show you guys again is how we find our consistency. So with that in mind, if we're still seeing bullishness on the weekly chart, I don't want to stand in front of that. I don't want to try to call a top in this market. That's likely going to keep grinding higher into the elections. However, we do need to keep in mind the climate that we're in. Things can change very, very quickly, and you need to be fluid in your analysis. Again, so every day you sit down for your trading session, you want to still observe, are the technicals still in alignment, right? Many times, as you guys know, we have a bullish bias. We stay with that bullish bias until completion, and it's just very straightforward. However, again, in the climate that we're in, there's a lot of things that have to be considered, right? And it takes a lot of responsibility to trade and manage your money responsibly at a very high level. So with that in mind, we traded down to the weekly fair value gap, finding support at the bullish order block. So I want to see the next weekly candle open, expand higher, close in the rest of that weekly fair value gap, and potentially make a run for all-time highs. Again, do not be stuck in this bias, because like I said, bombs start dropping on the other side of the world. China, Taiwan get into some problems. Russia, Ukraine, food supplies, a lot of things going on, like I said. So things can change very quickly in the markets. Not spreading fear, not spreading uncertainty. Just want you guys to be prepared and understand that we're in a very difficult climate right now. Not difficult for myself, our team, because we know what we're looking for. We know how to be patient, right? The way I coach my team to go into the markets is we go in there like a lion. We're not chasing every single thing that runs. We're looking for something very specific that's easy to take down. When the opportunity presents itself, we run it down and we bring it home to our family. Very straightforward. Not trying to trade every move, not even trying to trade every day. Just trading the best days with the easiest opportunities and trading real stress-free with confidence, knowing exactly what we're looking for and why we're doing it. Daily time frame. So we're still bullish on the daily chart, finding support inside this bullish order block that we've been watching, and we also stayed in the upper portion of that wick. The reason that's significant is because wicks are gaps. So if we stay in the upper portion of this wick here, that's communicating bullishness to me. And you guys know we've had the bullish order block labeled on our chart for the past week now, because again, we traded down into it on Friday. That made the low, and that gave us confidence for bullishness into the targets that I gave you guys a couple weeks ago. Since then, we've reached these premium targets. We've retraced off the highs down into the bullish order block. But what confirms to me it's still bullish? We're staying in the upper portion of that bullish order block. So as long as we stay supported here, we'll expect to run into this high, which is previous week's high. And then over here, we have the high from the previous month. So as long as institutional order flow remains bullish, we'll be looking for the buy side here in a premium. Once the high here is traded through, then I'll look for a full repricing of that fair value gap there. All this changes if we get below this wick here, consequent encroachment, extend that through. If we trade down through that, that invalidates the entire bullish bias, and then I have to look for lower prices. Somebody that's not as experienced may say, well, you're calling both sides of the market. What am I supposed to do with this? That is not the case. I'm one-sided. I'm bullish, right? I have no fear of being wrong, because being right or wrong doesn't change my bank account, right? It's about getting in here, getting what we're looking for, and getting paid from it. Being right or wrong has nothing to do with it. So what I want to give you guys is an invalidation level, because what tells me now things have shifted, we're not bullish anymore. I would want to know that if I was in your shoes. So as long as we remain above these key levels, I'm looking for higher prices. What changes that for me is trading below consequent encroachment of that wick right there. And that would invalidate all bullishness for me. And then I'm either neutral or bearish at that point. And at that point, I'll have to see how we trade at those levels, and then I'll be able to take in that information as we get there. So again, as long as institutional order flow remains bullish, premium arrays will be my higher time frame targets. Moving right along, the 4-hour FVG we are trading in now will give me the confirmation for bullishness or invalidate my bias and allow me to be flexible to what the market is doing. Again, I want to reemphasize this point again because it can't be stated enough. It's important to note to be flexible with the higher time frame bias. Since we are in a geopolitical climate where sentiment can change abruptly. Like I said, someone wakes up in a pissed off mood, they start launching bombs, things start happening in escalation with war in other parts of the world. Like I said, things can change very, very quickly. So you do want to be flexible and fluid in your bias. So with that in mind, this is the 4-hour fair value gap I'm referring to. If we're going to be bullish, make a run for the highs here and here, I'd want to see us act as an inversion fair value gap. Get above it, support, expand higher into the buy side here and here. If we trade down through that level with speed, then that invalidates the bullish bias, and I'll look for the sell side here and the sell side here. So again, one of the things I want to reemphasize to you guys is it's not the matter of being right or wrong. It's about knowing what you're looking for, how to confirm it or invalidate it. One of the things with my trading is I'm very fluid in my trading. I'm never locked into a bias. I take what the market gives me every single morning. And then based off that information I'm given, I'm then either looking to either be a short seller or a buyer based off the information the market's giving me. But I'm not stuck in the bias that I give on Sunday, especially not in this climate that we're in. So what we saw on the 4-hour chart was we dropped down last week. We see equal lows here and here, which makes sense, right? Anyone that was long, right? We called the market higher into premium targets. It delivered it. Then we expect the retracement. Where's it going to retrace to? Oh, where's the folks stop losses that are long that are going to trail their stop to lock in profits and be right here. So the market drops down into the sell stops. The bodies stay above it, confirming bullishness. And now we're seeing the market rotating back to the upside. So I'm looking at this as a drop, run on stops, now continuing the bullish trajectory. Again, what changes that is getting down through the 4-hour fair value gap. And Moralito's great point there. It's also the month of earnings. So even another factor in here that's going to bring a lot of volatility. We're likely going to see quick, violent moves, and I'm all here for it. I love trading fast markets. I like trading markets that are running to liquidity and inefficiencies quickly. And it's nothing to be fearful of if you know exactly what you're doing and what you're looking for. So if anything, I'm looking forward to the volatility. I like it because what it does is it creates more opportunities for myself and my team to go in and hunt and take down. So that's the end of the PowerPoint here. Hope you guys found that one insightful. And let me end the, one moment. All right, there we go. All right, guys. So that's it for what I had to share here. I do have the intention to touch on a few commodities, and then from there, going to look to keep it going. All right, so let's zoom out longer term because now commodities are starting to wake up with everything that we've got going on here around the world. So let's look at the weekly time frame for crude oil. We've seen this fair value gap completely repriced too. This up close candle traded through, and this confirms a shift in sentiment or a shift in order flow, confirming bullish sentiment to me on the weekly chart for crude oil. Again, there's also fundamental factors behind this. As the prospect of WAR rises, crude oil gets bid higher. Why is that? Well, if you understand what it requires to function, or for the war machines to function, it requires a lot of oil. So the prospect for demand for oil rises precipitously. It goes up a lot. So that increased speculation for higher demand for oil is going to cause more bullishness in the market, right? So there's real fundamental factors that drive the markets. But guess what? That technical analysis will tell you everything you need to know. So we get above these key levels on the weekly chart. We'll likely make a run into the 82s, 83s, and I wouldn't be surprised for us to get up into the 80s relatively quickly. And then through that, I'm expecting triple digits on crude oil going into the future. Maybe not by the end of this year, but probably going into Q1 of next year, I will be looking for triple digits in crude oil. And with the way things are going, it can get there really quickly. Let's drop down into the daily here. So daily chart, market drops, trades lower, down close candle, that's your bullish order block. Market drops down, it does what? Trades the mean threshold, which is 50% of the bullish order block. We want to see that. Well, preferably we see it stay in the upper portion, but if it does hit mean threshold, we want to see what? Immediate responsiveness to the upside it gives it. So now from here, let me take offset. From here, we drop down to the bullish order block. We see immediate responsiveness displacing away. So what I'll want to see now is this daily fair value gap here. And let me change that color. I do not want to see the actions inversion. I'm bullish. So I want to see us stay above this gap, use it as support, launch higher into these equal highs here at the 76.30 level. Above 76.30, we got 77.50. And then above 77.50, I'm looking at 81s, 82s into the near future for crude oil. I will be in here looking to actively engage this if I get the opportunities presented with my models. Last thing I want to take our attention to is sugar. This is another market that I'm actively interested in speculating in. Market trades higher, bullish breaker, fair value gap. We trade into it, institutional order flow entry drill. I want to see the next candle open, rip higher, and attack these highs here. So I'm bullish on commodities, and I want to see higher prices on sugar, on crude oil, and of course, gold. That goes without being said. We're looking for higher prices on gold as long as order flow remains bullish, and I don't see that changing anytime soon. So I know I usually always get the question to look at gold. So there it is, looking for higher prices, trust your buy models. I don't like trading this market. We drop down into the hourly chart. Like, if you just see how it delivers, personally, there's better assets to trade in my opinion, but nonetheless, gold is going higher. It is a good investment to own longer term because gold will absolutely be repriced higher in the geopolitical climate that we're in, but also if you understand the financial system, how it works, how our money's monopoly money, then it's basic math to understand how if you have an inflated currency, the cost of goods goes up. So it's a very simple equation to understand why gold, why metals will be repriced higher going forward. And I really like silver as a buy and hold, not necessarily for trading. I don't trade metals. I absolutely do own them from an investment standpoint though. So we do want to see higher prices on metals, again, just as a continuation of everything that we're seeing around the world. All right, and I believe that is everything. Yeah, so that's everything I had planned to share here today. See if we got any questions here for me today. Ready, Vemula, seasonal tendency and COT review. So the most I'm able to do for the free community for COT and seasonal tendencies will be the weekly newsletter that we send out on Sundays. There you have, again, our lead macro analyst breaking down what we're looking at on COT, seasonal tendencies, and why we're looking for it. So for that resource, definitely check out our website. Link should be below. And then you can check out our learning center, where then you'll be able to see our weekly blog posts. Price action mastermind, wick consequent encroachment is also weekly SIBI mean threshold. Absolutely. So going back to US dollar, what the gentleman is referring to, or I think it's a gentleman, not sure. Don't take any offense to that. I'm just having to go off username. So if you're not a gentleman, then just knock that to the side. So the weekly wick consequent encroachment is about here, which also overlaps with the monthly SIBI consequent encroachment. So one correction there, because it is an inefficiency, it will be consequent encroachment as opposed to mean threshold. So just a little touch there. But yes, absolutely. And one thing you guys will notice is that these key algorithmic levels do overlap many times. And when you do see the overlap of several algorithmic levels at one price point, that's usually going to be a highly sensitive key level for trade setups and reactions going forward. So good observation there. Price action mastermind. Carla, hello. Hope you're doing good. Luke, do you have a Discord group? Yes, I do. Yes, we do. All the details are on our website. Or if you want to schedule a consultation to speak with me directly, you can do that through our email. And I'll be making some time available in my evenings to do consultations, get you guys what you need. Momentum Trader, Dylan, you went over Treasury bonds, bearish S&P in the last YouTube. Prior to this one, appreciate it, Tyler. Thanks, brother. Appreciate you doing the research, my man. Absolutely. So the reversal in treasuries, we were actually looking at that 2 weeks ago here on YouTube when we were looking at the SMT. I told you guys if that holds, that's going to be really significant, right? So it's the small details you want to take notes of. Early on, you may not see it as important, but if you stay around long enough, get to a point where you have an advanced analysis, you'll start to see how all those details do come together. Appreciate it, my man. Moralitos, also the month of earning results. Yeah, absolutely. ZSG 777. But I don't like how we built up all that liquidity at the lows. Yeah, I see what you mean for indices. Let's go over to Nasdaq. Yeah, I definitely see your point there with equal lows. But here's the thing to keep in mind. If the market's in a buy program, if it's actively repricing higher, then it's going to seek premium inefficiency and premium buy side liquidity. So the equal lows in a buy program aren't as much of a factor for me. So just some things to keep in mind there. Shared what I'd use to invalidate it. So if we do attack those lows, you know exactly what to look for. If we're going to not attack those lows and trade higher, you know exactly what to look for. That's the power of pre-market analysis, knowing how to weigh all these factors out and come to your own conclusion. So for me, it's not even a factor of these lows until I start to see weakness. Because if the market's in a buy program, it's actively offering buy side liquidity and premium inefficiencies to the marketplace. I'm not going to look for it to attack sell side. Jose, gracias por compartir este análisis. Un placer. Gracias por venir. Momentum Trader newsletter at the bottom page as well. Appreciate it. Yes, sir, Tyler. Thank you very much. Arun, thanks for the session. Absolutely. Appreciate you joining. Luke, would you expect an open lower at the start of the week and still attack the highs? Ideally, that's what I'd say, yes. If I'm bullish, generally I'll look for a discount to be priced in early in the week and then see the market trade higher. However, and then I see your second question where you might typically look for an opportunity, and are you typically waiting till Tuesday? So what I do is I go into the markets Monday mornings with my team, and I do go live and I carve out setups with them just about every Monday. Every Monday, there are setups. I know generally we like to avoid Mondays because it's just lower probability. It's difficult, but it's only difficult if you don't know what you're looking for and you don't know how to manage expectations. So if you do know how to go into the markets, get exactly what you're looking for, you can trade Mondays because it's doing the same things. It's just going to be more difficult for a developing student. And there are better days to trade than Mondays with no news. So some things to keep in mind, but there are absolutely setups. Every day the market's running to liquidity and inefficiency. And like I said, I'm all over it with my group like white on rice. So for the biggest expansions, for the biggest moves in line with the weekly bias, generally I'll wait for Tuesday for those types of setups. But that does not mean you can't go in there Monday and slice and dice and scalp if you know what you're looking for. But that's the key. You have to know how to manage it. You can't go into a scalper's market and try to hold for these huge ranges because then there's a disconnect in the price delivery and what you're trading. And that's where we usually run into problems. But if we know how to manage our expectations effectively, then it's not a problem. Luke, okay, thanks for your answer and insight. Yeah, absolutely. Manny, how long did it take you to learn everything you know about trading and investing? Thanks. About 5 years. About 5 years to know what I know and where I'm at now. Because you would think it's just the technical side, but you know what you learn is that's actually only one component to it. The key is actually understanding how the world works. Because if you know how the world works, then it gives you a lot of insight into trading and the markets that most won't have. There's a lot of things that come together to do and show what it is that I'm able to do. Sal, NQ on the daily, what's the rationale behind the invalidation point you picked? That's a good question, Sal. Now let's go back to that. Let's go to Nasdaq daily time frame. All right. So what's the rationale behind this invalidation point here? That's a good question. So if we get below consequent encroachment of the wick here, that's what I shared would cancel any bullishness for me. Reason being is because if we get down through this candle low here, that's not good. So when I'm bullish, what I'm also actively looking for is, yes, I want to see down close candle support price, but I want to see all candles supported. So even this down close candle here, I don't want to see it trade all the way through that. That's not as bullish for me to get down through these opening prices. So I want to see it do what? Stay in the upper portion of this candle, expand. Same thing here, this up close candle here. I want to see it trade down into it, stay in the upper portion, and expand higher from here. Now, same thing here. This up close candle, I don't want to see us trade all the way down through that. Because if we open, trade lower, and get down below the opening price of that candle, that's not bullish for me anymore. Because now we're trading down through this whole down close candle, or this up close candle rather, and now we're getting through consequent encroachment of that wick. In my mind, we've already retraced, we hit the bullish order block, recapitalized off it, and now it's trading higher. There's no business getting down into here. So it's really an experience factor that allows me to invalidate a trade quickly, because most folks would have to wait for like a shift in market structure and a displacement to the downside. That's not wrong to look for that early on, but as you could become more advanced in your analysis, you can invalidate or validate a bias a lot quicker because of all the precision elements that we look for in price action. So in my mind, getting below that opening price isn't bullish for me at all. And if we get down through the wick, consequent encroachment, even less. And then that'll either have me neutral or looking for lower prices. Hopefully that makes sense there, Sal. Manny, true words. Thank you very much, sir. Michael, thank you. Absolutely. Tyler, and how your mind works. LOL, I've been finding that out all year. Appreciate that, Tyler. Thanks, brother. Manny, really appreciate the donation, brother. Thank you very much. Much appreciated, Danny. Manny, thank you for your support. Glad it was helpful for you, brother. Caleb. Yeah. Awesome, guys. Appreciate the donation, Caleb. Alrighty, guys. You guys have anything else for me? Well, actually, before I sign off, do hit the like button. See, there's about 70 of you guys in here up to this point. So do hit the like button on your way out. Helps us out greatly. Like I said, it's a motivating factor. Keep me coming out here on the YouTube with you guys on Sundays. Alrighty, see the questions are starting to wrap up. I appreciate you guys all joining me here today. Daniel, so on NQ, you won't be looking for a low of the week? Well, if it's bullish, it has to make a low of the week, right? If it's going to go higher, it has to make a low at some point. So absolutely, yeah. It can't go up without making a low first. Because of the market structure, I think that's more what you're asking. Because of the market structure, there's no need for a deep retracement here. This is all, these are things you get more advanced insights. Like I said, if I gave you guys everything I'm looking at, I'd easily be here for 3 hours. But look at all this back and forth here. It's just like all this back and forth here. So I'm going to take this range and put it over this range here. What's this? Up, down, up, down, up, down, and then we leave it to the upside. That becomes what? A balanced price range. So when we drop down into this balanced price range, what do I want to see? I want to see support to the upside, because that confirms bullishness for me. It's a lot more than just down close candle support price higher. It's also balanced price ranges. So now take that same logic that we use with my group, that I use to trade and map out the bias. Now apply that same logic here. What's this? A balanced price range. So inside of this market structure, there's no need for the market to drop all the way down, make a low of the week, then trade higher. So there's other things that have to be considered when you're looking at the low of the week, and a lot of that is market structure, balanced price ranges, institutional order flow, and understanding how that comes together. There's no need in this market structure to do a deep retracement. So it can absolutely open, drop a little bit, and trade higher. But with this market structure, like I said, I don't require a deep Judah swing to then trade higher. So we'll see what we get. Again, you guys know what invalidates or validates my bias, but those are just some of the factors that make this an invalidation level. Because if we get down through consequent encroachment of that daily wick, what is that here? Well, that means we're trading down through midpoint of that balanced price range. So if we get down through the midpoint of that balanced price range, that's not bullish for me. So you see, there's a lot of things that I use for my invalidation levels that, like I said, I'd be here all day if I was explaining it to you guys. Those of you guys that are in the private community, you guys know all this already. but I do want to make it complete. So if you guys are asking, I'll give you guys the information. So hopefully that covers your question there, Daniel. Why I'm not looking for a deep retracement before expansion higher. Pelican, do you live stream during the week? Absolutely, every day. Oh, every day just about. Richard Watts, thank you for all you do. Appreciate you. Thanks for joining us, Richard. Zen, Thursday's candle on order block, right? Could be support this week. Down close candle should support price if we're bullish. Yep. Cobra, since it is a new month, do you look at monthly power of 3? Absolutely. I look at power of 3 on all time frames. 3-month chart, 1-month chart, weekly chart, daily chart, hourly chart. I consider all those powers of 3s when I'm trading, because all those are going to be, I guess, time cycles in and of themselves for power of 3, and that's what I'm looking at top down. So if you want superior top down analysis, look at power of 3 on the monthly, weekly, daily, hourly, and make all that fit together, and you'll see how the markets come together like a Swiss timepiece. Beautiful, beautiful, beautiful precision if we know what we're looking for. Tyler, looking forward to your live streams during the week in the Adora community, Dylan. Absolutely, Tyler. Appreciate you, brother. Looking forward to crushing it with you guys as well. I'm looking forward to keeping that momentum going from first week in October and September. Absolutely crushing it. Daniel, thanks, man. Pleasure's all mine. Man, great stream as always. Thank you, Dylan. Appreciate you guys. Thank you. Thank you, Frank. Thanks for joining, brother. Alrighty, guys, that will be it for me. I do have to make my escape now and get going. Hope you guys enjoyed the stream. Thank you very much for joining us and for your support. I'll look to see you guys next Sunday. And I was talking with my team. I know I've been really busy. I've been wanting to do live streams on YouTube of me live trading. However, I've been very focused this year. Like I said, I'm working with a group that I took on at the beginning of the year and folks that are joining now. And my full commitment is to them, getting them to where they need to get to in their trading. They've entrusted myself and my team with their financial future, with their financial freedom. And I take that responsibility very seriously. So I don't have a lot of time to be fucking around on YouTube when I got to teach my community, my clients, to get the results that they paid and invested for. So I know you guys have been asking me a lot about live streams on YouTube. I'm on a mission this year. Not only am I raking in the dough with my own trading, but I'm making others financially free in the process. And it's not an easy feat. It requires a lot of work from myself and my team to see that mission through. So I hope you guys can understand that. Maybe going forward, I'll look to see what I can do for YouTube live streams. But like I said, I'm very focused this year on the job and the task at hand. Jose, best ICT student. I appreciate that. I appreciate that. Thanks for the compliment. All right, guys, that's going to be it for me. Have an awesome rest of your Sunday. Hope you guys crush it this week, and I'll see you guys on the next one. Take care, guys.